Hi, welcome back to the video. As mentioned on the last week discussion, the outlook, the market is looking for reason to sell down, and indeed, they have been selling down. And let's look at how the indices performed, and then we'll go to the email to discuss stocks that I have highlighted. And if you like to receive the emails every day, just simply have an account with me, trade with me, and then you'll receive it every day. So if you have traded and then you don't receive anything from me, please feel free to WhatsApp me. I am very approachable. And WhatsApp, I'll just try to solve your issue as fast as possible. Okay, so let's come to the STI. So you can see here, STI broke the 3092 support level, which is a very key support level. Okay, and we have seen the index gone down back to 3052, right, and then rebound from there. So seems like a deja vu because 3050 or 3052 thereabout used to be a very strong major support for the index. This is the one that you're looking on the screen. Okay, so this level has been tested many times in the past, and now the index actually managed to find it as a base to rebound. Okay, but today we got dragged down by S&P 500. We're going to go through that later on. And it is very important not to retest this level, because if we retest this level and break down, we have a lower high, lower low, and this is where the market may be heading significantly lower, because the next crucial support is at 2969 thereabouts. Now, looking at Hang Seng, this index is on a perpetual downtrend, but of course it has many swings. There were many attempts to revive the ailing economy, but unfortunately all come to failure. And we can see Hang Seng now is coming back to this low, which is its support now. Okay, so if we are going for a long-term investment with the Hong Kong market or the Hang Seng Index, the best indicators is to look at the China economy, which is not doing well. That's why you can see the downtrend has been there like almost forever. There will be attempts to try to revive the index here and there, now and then. But then if it were to break down this support at around 887 thereabouts, or 987, then you can see that you will fill up this gap. And if you know technical analysis, all gaps are meant to be filled. So it will be a long winter for the index if it fill up this gap, because once it fill up this gap, it can pave the way for it to continue lower, where its lowest point was 14,617. Now going to S&P 500, which I'm going to use SPY. So last week I mentioned that the market is looking for a reason to sell down, and if we were to break this low, this very low point around 4,290 points, it will continue to go down lower. And it did, it came down, and if you follow the drawing that I have plotted, and it has fulfilled almost everything. So the next is to see whether the S&P 500 will fulfill the next part, whether it will form a base and rebound over here, okay, which the year-end rally everybody is expecting, or it will do a quick sell-off first before it recover. So just a quick recap. In the past, I have posted this chart, and I have been doing so. So this chart with the major support come projected level here, right? This level can be still achieved, right, if the market continues to sell off. With this is measured by the head and shoulder formation from here, where you can see it projects to this level. So here you will find that this level is here, around here, and S&P 500 can still hit this level if it cannot form a base and recover from here. So next week will be November already, and let's hope that it doesn't fulfill the target that the Head and Shoulder projected, and the rebound takes place quick and fast. And how do we know that you will rebound quick and fast? So it all depends on FOMC next week. 1st November, Powell will make his speech. And this Friday, there's a key data to look out for as well. Tonight, there's a key data, GDP data, but tomorrow will be more important because it is a reflection of inflation, which is the personal consumer expenses, which I mentioned last time. 2 videos ago when the CPI was announced. I said up next is the PCE. Okay, so this will be a critical moment for the index. As of now, the futures is actually hitting around 415 something. So it's about this level now. It's about here, which is somewhere where I have plotted here, around here. And if it can survive tonight and rebound the next few days, then we have a change in the direction, potential change in direction. What we are looking for is this, something like this, this to help the index to survive. Now, previously, you can see the index also have a topish pattern over here. And you had a projected target, which was, oops, how come it's pointing up? Should be pointing down. Okay, let's start again. It was having a projected target of around 3,740 points. It touch and rebound. So seems like the S&P 500 may not fulfill this. Okay, or it may have a few days of downside to hit this 4050 thereabouts before it recover. So maybe next Monday or next Tuesday it hit that level, then FOMC comes the market and the rebound happen. Hard to say. So we are looking for this going forward as well. Okay, where the arrow is pointing right now. Okay, so with this, I hope that you are well prepared. Okay, and I'm going to share with you something that may interest you if you are risk adverse, if you are looking at to grow your money. Okay, because you got to be prepared. Interest in the bank is high right now. T-bill is high right now, but it is not going to be forever. It's not going to be forever. Why? Because the US debt is very high. A lot of country is owing money out elsewhere, and if the interest rate remains high, they will suffer. And in the end, the economy will suffer. And if the economy suffer, then they have to drop the interest rate again. So this is the cycle. So you got to be prepared with that situation, and I'm going to share with you how do you get prepared later on. But now let's take a look at the email. What are the stocks that was highlighted? Okay, so the email is here, and let's start with this week one because we don't really have a lot of stocks. I don't really have a lot of stocks to highlight, except that I mentioned about AEM last week, and I posted in the email. And I am looking for a follow-through buying for this bullish engulfing pattern. And unfortunately, it was a pump and sell off, and I'm going to talk about it later on. And Joe Energy, we have it here where in a broader view, it seems to be trying to form a inverse and shoulder for a change of trend. And when I do a projection, it just nicely hit into this resistance, which is telling me that if it can successfully form this inverse and shoulder pattern and break out from it, it is still possible for it to hit 405. Okay, so let's see how the stock perform. And then I have iFast and Yangzijiang Shipping. So iFast is one of the counter that really, what we call disappoint both sides. Okay, for those who shorted the stocks earlier because of this sell-off, right, with the face challenges right now, because the good result actually helped the stocks recover to this range, and we're going to discuss the chart. So in the face of this kind of quick changes, how do we adapt to it? I think to be frank and honest, time is the best to settle this. Okay, so how do I settle this? I'm going to explain to you later on. So Yangzijiang has a hammer at this 200-day MA support confluence with this 137, and then the resistance 155. But so far the counter hasn't reached there yet, so we're going to look at what are the potential chance for it to hit there. Then we have UOB. So unfortunately, UOB result did not do well this morning because of some acquisition they have done earlier that resulted in higher expenditure. Then the net profit has come down and the EPS has come down. But this shouldn't be a sign for it to sell off. But anyway, the market decided that they should sell down, which is good. When the stocks goes lower, then it's chance for you to collect more of this UOB. But then we're going to discuss where's the support below this 2763. Next, we are looking at Genting today. Genting has a double bottom formation, and we are expecting a breakout to change its trend. So let's see whether Genting can do it. Okay, so let's take a look at the chart right now. Okay, so let's start with AEM. Like I mentioned, if there's no follow-through buying to push the stocks back to resistance, it will be just a pump and sell-off action. And indeed, the next day it went down, erasing most of the gains. And then it continued to sell the next day with a long black, and the volume was high. It managed to recover, so seemingly holding at this trendline support. But today it breaks the trendline support again. So this means that the counter is facing headwinds, and there's chance for it to go down more than it recover, unless there's a miracle later on where the counter close back to 350 level. So for those AEM traders, you got to watch out, because this is a first bad sign for the counter. Okay, and also watch the volumes. Currently, the volume is not as high. If the volume become higher and higher towards the end of the day, I think the best is to protect your downside. So meaning to say, suffer a little bit of losses, keep the capital there, and then fight later on. Because nowadays the market, like I say, is bearish. In the index, it looks bearish. So therefore, we need to know how to protect ourselves. And the next that you need to take note is that for AEM, finally, right, is this, because you can see the support level, right? The trend line is not only for the daily, but also the weekly chart. You can see this trend line is compromised. So this is not a good sign unless it can close higher. And it may hit back 329 support. So turning its trend back to down. And if it continues to sell off, then you'll be 308 again. So watch for your position now. Next will be the counter that I post in the email, which is, let me see what is the counter here. Let me have a quick refresher. So after EN, Joe Energy, yes, Joe Energy. So how does Joe Energy perform? So Geo-Energy is still consolidating, and it still have a chance to form the right shoulder. So the right shoulder, the left shoulder already formed up. We have the head, and then we need the right shoulder to form up, and then we have the breakout to happen, and then go to 405 here. So it is still pretty okay, and now it's just for it to go back to 3132 and break out from there. Then if you are having this counter holding this position, you should continue to hold on. If you are not having this, maybe some position, just my own personal opinion. Okay, next will be iFast. So iFast sell off with high volume here, and then managed to recover back to test the resistance over here with high volume, because the result was very good. It was very, very good. Okay, and it has a chance for it to change its trend. So now let's relook at how it is going to pan out. So I mentioned it has a chance to change its trend. So how to change its trend? So if you look at here, this is a major sideway. Okay, so the support is here, which is it whipped, so it overshoot, so it whipped back up, and now it goes back into this sideway. And if it goes into uptrend, it will go to 602 resistance and break out from there. And many moons ago, rather, it was projected to hit 630, but it did not continue go there. So we shall see where it would perform, or where it would trade to. Okay, if it doesn't close high today and close lower, remain in the sideway, then watch for the support and resistance. So the support at the 544 now changed to 529. Okay, 529, and then the resistance remain the same, and we are looking at the stocks to continue its bullishness if we can break out of this range. So if we can break out of this range, then it can hit to even higher than originally projected, maybe even 672 level. So continue to watch. Next is Yang Zijiang. How did the hammer pan out to be? So the hammer that was posted got its confirmation the next day. So this is a good follow-through buying. And the counter right now is trading at 147148, which is a very good sign. So this tells us that the 155 resistance may be tested, may be able to reach next week if nothing goes wrong. Unless the counter suddenly close low at 143 today, then it may not be able to reach there. So if we can hit 148 and close there, then of course it has already traded 148. Now the question is whether can it close there. So if we can close there and above, then we have a chance to see 155. And next will be UOB. So this bank, right, the market doesn't like the result, sell off, hit the low at the 27.02, which free up this gap. So all gaps are meant to be filled, and most of the gaps are filled, so except a little bit left to 26.95. Overall, the whole chart is not really bullish as yet, and you can see it's a whole huge sideway. And if this sideway were to continue, then it may hit the low to 26.39, then rebound back to 29.33. So there's a big swing up and down. So the next quarterly result will be very important. Why? Because if it shows that the new business is contributing very well, well, the stocks is going to potentially fly up, I would say, because this is where they will have more room to grow. Next will be this counter we look at is Genting Seng. Genting Seng. So how did Genting Seng perform today? Genting, wow, exciting, breakout nicely, volume increasing. hit the high of 88, which is the resistance. So if we can sustain and close as a nice white candle now, then we have the chance to see a potential change in trend. So I think the recent result from MBS was very good. The tourism picked up, spending picked up. That's why I think Genting also would experience the same thing. That's why the market push it up. Okay, so let's see whether it can successfully change its trend. Okay, now I'm going to close this video with the strategy in investment that I share about if you are risk averse taker. So you are risk averse and you still want to participate in the potential market growth. Okay, so this is one of the so-called counters that you can consider to invest. To do dollar cost averaging, in short, we call it DCA, for a longer term period where you can enjoy a good 3 to 5% return depending on how you DCA. It can grow to 5% if you DCA well. Right? If not, then you will be enjoying 3 to 4%, which is still not so bad. Okay. So the interest is comparable to the banks, and you should be prepared, like I say, that the bank interest will not remain high because the sovereign debt is very high, and they have to fork out extra money to pay off the interest if the interest rate remains high. So there will be some point where the interest rate will come down, especially when the economy is not doing well. The market got to boost, the government got to boost the economy, so they will have to drop the interest. So in that case, what am I talking about? I'm actually talking about this. So assuming that the Singapore economy continue to do fairly well, continue to perform, then we can continue to see movement gradually up. So since 2020, when the economy crashed, the economy has been recovering. As you can see, STI has been steadily going up as well. Okay, and you can see that I've marked some dates over here. So assuming that I started investing this STI ETF in the year of 2021. Okay, and I am able to catch somewhere near the low, not exact low, but somewhere near the low. Okay, all this mark date lah. So if I'm able to do so, this will be my result. Okay, so I put it in the Excel. So the average price collected on STI on the mark date is here. So you can see these are the prices that purchase. You don't need to buy big amount. So you can buy each time 1, 2, 3, 4, 5, 6, 7. So you can buy 1,500 shares or 1,600 shares. So let's say you have done that and you collected 10,000 shares, which means that your value that you have put in is around 30,300, okay, or 400. So why is that so? Because the average price for the price that you have bought in the past is around 303, okay, 303 point, or rather 3.0357, okay. And these are the dividends that you collected over the 3 years, 2021, 2022, 2023. So you collect dividend, and you will find that the collected amount is 3,410. So that will be 11% for the past 3 years. So if you break it down to per year, it will be 3.74. So this is about the same as T-bill. Okay, T-bill. And the best part of all is this STI ETF is a very steady investment where you wouldn't find the STI go disappear, right? So this ETF will remain there, and then while you're waiting for that capital appreciation, you are collecting dividend where you are getting a per year yield of 3.74. Even if you don't realize your capital gain and continue to do dollar cost averaging, if you can push down that this amount, 303, to somewhere lower, right? So let me just put this aside and then just simulate the amount. If you can continue dollar cost average lower, meaning to say the whole market is not doing well, STI still continue to go down, you can buy at lower price, and then you manage to push your average price to 290. Okay, then you will find that for the past 3 years, right, you will have this, let me just adjust accordingly. So if I were to have this average price, so my value here, okay, will be equals to, my value of investment will be times this. And let's say when I push it to 290, my average price go down to 290, I already accumulated to 20,000 share. So then you will find that your yield has grown up to 3.92%. Now, if you push it further down, say to 270, and you accumulated 30,000 share in the course of doing so, so you have a total investment of 81,000 and your yield become 4.21. Okay, so if you continue to do so until, let's say, a significant amount, push it to 250, and then this is 50,000. Okay, then you will have 4.55 per annum. So what is 4.55 per annum, right? It means that you will have this huge dividend that is coming from this. Okay, so if you're investing 12,500, right? And then you have a 4.55 per annum percentage. So your per year dividend is around 5,700. Okay, 5,700. And if the market recovers strongly and you will be able to sell STI ETF back to the market at 320, 330, then your capital growth will help you to grow your war chest. And when the market start to go weak again, and then this is where you can start your dollar cost averaging cycle again, and you will be able to compound your return going forward. Because if you're able to sell high, say you sell at $3, you make a 50-cent profit. So if you make a 50-cent profit, you sell at $3, so that will be your paper profit, not paper profit, realized profit with the 50,000 that you collected, that will be 25,000. So instead of investing 125,000 in future, you will be investing 150,000. 150,000, then your dividend in going forward will increase as well. So this is how you can compound your return and grow going forward. Okay, so yeah, if you're risk averse, you may want to consider this very defensive way to participate in the market, and not needing to worry that, hey, will it crash down and never recover? I will assure you that STI will recover as long as our economy is doing well. Of course, the negative example that the market have shown us is Seng, the Hong Kong market. So the China economy is not doing well, has been going down since it hit the high of 8% or 10%, I can't remember. Then now it is languished at 4%, or per quarter growth is not even 1%. So this is where you can see Hang Seng has been going down on a very bad downtrend. And if you were to do that on Hang Seng, then of course you will be in winter for many years, right? Since the year 2020. So it has been, even before that, it has been down. Okay, so yeah, so STI, I think the Singapore economy is still I would say robust, because we are friendly to every country. We won't expect those blacklists coming to Singapore, right, like China. Okay, so this is what I have to share with you. Thank you for viewing this week's video and appreciate the like, and I will see you again next week.